Hello and welcome to this edition of Biz Talk. I'm Lily Lu. In today's Biz Talk, we zoom in on China's consumption strength. Latest figures show that China's retail sales of consumer goods continue to expand in the first half of 2023. The ongoing economic recovery and rise in residents' income have stimulated an increased propensity among consumers to be willing to spend money more generously. Now, how is the structure of consumption changed? With consumption upgrading and supply chain advantages, where are the opportunities for new brands in China? And the big question, can China hold on to this growth momentum for the second half of the year? Joining me today are Professor Michael Powers, Chair Professor of Finance at the School of Economics and Management of Tsinghua University. Welcome to the show.
Thank you.
And Mr. Bruno Lannes, Senior Partner of Bain Company.
Thank you.
And also we have Mr. Shiong, Founding Partner of China Growth Capital.
Thank you for having me here.
Great to have you on the show, gentlemen. So we're going to talk about China's consumption data. First of all, let's take a more detailed look at those numbers that were just released a few days ago concerning the development of China in the first half of 2023. Well, China has released its consumption data for the first half of 2023. Let's take a look at some of the key numbers here. Total retail sales of consumer goods went up by 8.2% compared to the previous year. Consumer spending played a significant role in driving economic growth, accounting for 77% of the overall growth. Well, that number is significantly higher than the previous year. In terms of prices, there hasn't been significant changes. Inflation remained steady with a slight increase in consumer price index of 0.7% on the year. So let's start by having a bit of data analysis. Can I start with Professor Powers? Could you help us to understand better what do those numbers tell us? And especially, what does it reveal about the main drivers of consumption, especially considering we're amid a currently global low growth period?
Well, thank you for the opportunity to do some data analysis. Actually, my background is in statistics, and that's what I like to do. I'm afraid I would say, perhaps the first thing I would say is not that exciting, and that is that I think that there's some volatility in these numbers. And that if you look at the most recent quarter compared to the first quarter of the year, there are differences in those numbers. And then if you look by sector within retail sales, you'll see that there are ups and downs, there are weak spots and there are strong spots. So I think it may be difficult to read too much into any particular numbers at this point. What I like to do, especially coming out of this extended COVID period, is to look at where things were in the pre-COVID years and sort of the longer term technical trends, see how they were disrupted, which they were in China and throughout the world. And then where are we on the other side? How are we coming out on the other side? And I think that in terms of things like GDP, for example, GDP growth, we see we're coming out the other side pretty much where we left off, when COVID first emerged. And it seems the numbers are fairly stable. But when you look at consumption data, some of the figures that you have indicated in terms of retail sales and so forth, there is more volatility in those numbers. So I think we need to, what we could say is that they are in the positive territory, that if you take the first and the second quarter together, things look generally good from most perspectives. But the 3.1% figure that you indicated is a little bit lower than many analysts would have expected. And so I think that there is a concern about not enough demand domestically in China. And that's something that the government has been addressing.
Yes, we're going to go into that later on in the program. But for now, let me go to Mr. Lannes. What is your thought on that?
There are a couple of considerations. I agree with what Professor Powers just said, I think, in terms of volatility. I think number one, there is maybe a difference in expectation, and because we always compare the situation with whatever expectations we had, and I think a lot of our expectations for China growth were probably misplaced. because they were compared to the Western expectations and to the Western performance over 2022 when COVID was over a bit earlier than in China. And so in those countries, there was a stimulus, a very, very strong stimulus that was there during the COVID times. And of course, we didn't have that in China during that time. And so when COVID was over, of course, we didn't have the benefit of having had a stimulus. And therefore, the recovery out of COVID was much slower than what I think was expected. That's the first point. I think the second point is, unlike the Western markets, 2022 has been a difficult year for China economy, for China employment, particularly in some sectors, of course. And so these are some, these difficulties, these challenges that we all faced in China have lingering consequences in 23. And in particular, when you think about income per capita, when you think about unemployment, and I think these are structural drivers of what's going on today, which I think we cannot escape. I think the number three consideration that I would bring to the discussion is around how the Chinese behaviors and what is up and what is down. I think it's very clear when you look at the data that everything that is experience consumption oriented, as opposed to product consumption oriented, is doing a lot better. So tourism, travel, even restaurants, catering, all of those sectors have enjoyed double-digit growth. I think even domestic travel is much higher in the first 6 months of 23 compared to 2019 pre-COVID. So I think the Chinese consumers are demonstrating that they want to live. They don't want just to buy products, they want to live. And I think we probably during COVID forgot that we should not take life for granted, and then seeing our friends, family, relatives is something that is important to who we are. We all say that human beings are social animals, and I think that was a demonstration of we are all social animals, and we want just to meet and cheer each other up post-COVID. And so that's what the Chinese consumers have done. And in that context, therefore, they have spent less on other things. And so you see everything that's related to the construction sector, just to show an opposite negative trend. This is still, very, very so difficult because of real estate, of course, as we know. And so all the sectors that are dependent on real estate are also continuing to suffer. So yes, so we have all these considerations at the same time, and so that's why I think it's a work in progress. I would qualify, I think, the consumption numbers for the first half, but I'm optimistic for the second half, definitely.
Okay, so you talked about highlights within the numbers and also challenges. We're going to get into those details later on. Let me go to Wayne first. Mr. Wayne Shiong, as an investor, how would you read China's consumer data for the first half of the year?
Right. So because we're venture capital, we're doing early stage startups, and we're not into real estate. So if you look at the data from a non-real estate perspective, actually it's kind of okay. Right. Usually real estate and cars will just consist of like 50% of consumption. And now people, with what's going on in real estate in China, and then you still have like this kind of 8% growth. I think that's quite impressive. But of course, you can feel the heat in the market, right? Well, when we travel, there's it's hard to get a ticket, and all the hotels are full, and so if you look at the sectors we're in, we're looking at the discretionary consumer product, we're looking at technology consumer products, and from that perspective, I think the recovery is very obvious. So I think it's a pretty good start for all of us in the venture capital market, and to see the consumer are spending money on new products, on new brands. That's encouraging, and of course, on a very, very high level, on the macro level, then we still suffer from the kind of recovery or adjustment of the real estate sector, where we're kind of still fine tuning the car kind of evolution from gas powered cars to EVs, and all of those transitions are happening all at once. But from my understanding, look at the sectors experienced the COVID hard times. I think the market has come to a quite successful recovery.
So there's already quite some interesting findings there, gentlemen, that you just gave me. Professor Powers and Mr. Lannes, you both talked about volatilities in the first half year numbers. Mr. Lannes, you talked about some of the bright spots and some of the challenges, delving deep into those numbers. And Mr. Shiong, as an investor who lives in China, who do business in China, he's very much looking at the bright side and looking for new opportunities emerging from the current economic growth. So very interesting. As Mr. Powers said, you said that the demand could be something that the government is addressing, one of the key problems that the government is addressing at the moment. And in China, we all know this saying that confidence is more precious than gold. So let's talk about consumer confidence. And we have some third-party data showing that consumer confidence in China is actually bouncing back. These data show that consumers are increasing their spending on things like food, fashion, and healthcare. As people regain trust and optimism, China's consumer market is getting ready for quite an exciting period of growth. And this represents excellent opportunities for businesses and the overall economy to thrive. So let's get into our discussion about that. Professor Powers, how do you foresee, though, China's consumption playing out in the second half of the year?
I think that it will improve, and I think consumer confidence will improve. It has bounced back somewhat, as you indicated. It's still considerably lower than at pre-COVID times. I think that one point that was made by Mr. Lannes is very apt, and that is that I think that when many analysts, especially Western analysts, look at what's going on in China's economy right now, they're seeing it through the perspective of how things happened in the West. And so let's take my country, the United States in particular. There was a huge stimulus during the COVID period, and as the U.S. was coming out of that, which drove demand in many ways and got the economy back on its feet. It didn't lead to tremendous growth, but certainly brought the country out of the COVID-oriented recession. So that was one approach. Now that led to, or at least was partly responsible, to massive, very unexpected rise in inflation, which then became a problem in the U.S. economy as well as some European economies. And I think that the Chinese government wants to avoid that. Now, during the COVID period, there was not this type of fiscal stimulus in China. Many people have said, well, because there wasn't that sort of fiscal stimulus, because inflation is very low in China, perhaps this is a good time for stimulus. But it does seem that China's government is more cautious, much more cautious than the U.S. government in this area. And there's a certain irony in this, in that the U.S. is often viewed as a country that relies on its markets to regulate everything, to fix all the problems and so forth, whereas China is seen as a country that relies on government. And actually, we're sort of seeing the opposite here. I think we're seeing China's government is relying on the markets, is actually expecting the markets, not immediately, but in a slow, deliberate way to recover from the COVID period. Whereas in the United States, I think there was the sense of desperation almost, that we had to do something, we have to throw money at the problem. So I think what we'll see in China is a more targeted approach. It's slower than what many analysts would want. Perhaps those who would like to see a rise in the stock market index, slower than what they would want to see. But in terms of stability and this long-term stability of the recovery, I think that it's actually a very good approach, especially when we start talking about things such as the role of the real estate sector and other asset classes, which complicate the matter considerably.
Oh, interesting insights on there. Mr. Lannes, can I get to you on the same question? You talked about how you are quite optimistic about second half.
Yes, as I said, there are some good drivers and bright spots, I think, in what we have seen. We should also be aware, I think you have that data, that even if 8.2% is the average retail sales growth for the first 6 months, the last 3 months have actually shown a declining growth rate. As you know, April was really, really high double digit, and then May was lower than that, high single digit, and then June, which was published just a couple of days ago, shows a very low single digit growth. So I think this is a worrying pattern, I think, and that's why I'm optimistic that the government will have to do something given the volatility, but also the trend over the last 3 months in terms of retail growth. Having said this, I think you mentioned some bright spots, and we, as Bain, as you know, we publish twice a year what we call the shopper report, and we just published in June, so last month, the first one of 2023, and we look at the consumption in 22 and also the first few months of 23, and we do that with Kantar World Panel, looking at 50,000 households and looking at what they buy and what they buy less of, etc. So looking at that data, which is very unique and which we have tracked for 12 years now, we see a trend which we actually happened right after COVID in second half of 2020, which is a trend of deflation. And in other words, Chinese consumers are a lot more price sensitive than they were. If you remember, before 2019, it was all about premiumization. There was no end to the appetite of Chinese to buy the latest innovation, even though that latest innovation could be pricey. And that was across all sectors. What we have seen since second half of 2020 up to today is really the reverse of that trend. So there are still some categories where you see premiumization, and that's very healthy. And I think you mentioned beauty, we can mention pet food. I think a lot of the hygiene and health related, because of COVID, of course, categories have enjoyed high growth and also premiumization. But you see other categories where there is a lot more price sensitivity. And also even more today, as I mentioned earlier, that if consumers spend more on travel and tourism and restaurants and catering and hotels, which is what they do, then of course that is taking a lion's share of their purchasing power, and therefore they have less money and therefore more appetite for bargain hunting across the other categories where they buy products. So I think you have to come to terms with this reality that there is price sensitivity from the consumers. Mm-hmm. We have seen it in the 618, for example, which I think have shown that is very, very promotional led. On one hand, you also see the slowing growth of retail sales over the last 3 months. And so therefore, I think the government has now, I think we're going to talk about this, but all the input that they need to be able to put in place a stimulus package, which has to be more targeted, I agree. But I think that's what we should expect. Having said that, and that will be my last point for your question, I think I'm very optimistic because I think the fundamentals of the Chinese consumptions are in place. And so we see urbanization, we see income per capita growth, even though 2022 has been quite impactful in terms of income per capita, as I mentioned earlier. We see low inflation, even some deflation, low energy prices, and as we know, economy is transformed energy. So if energy is cheap, then there is much reason to be optimistic about the economic growth for the country. So I think there are some fundamentals that are in place, and so that's why I think a combination of those fundamentals and the stimulus, I think, would make a great second half.
That's a great point that you made, Leslie, about the fundamentals have not changed. Let me go to Mr. Shiong now. You are an investor and you look into emerging businesses and some small businesses, new business ideas. You probably know about the economic dynamics better than anyone. So how did you do in first half? Was it a busy first half year 2023, and what do you expect of the second half of the year?
Yeah, absolutely. I'm totally in line with the two gentlemen's comments, and I totally agree. Second half could be more exciting. Look at the schools, right? Look at so, for example, I live in Beijing, and look at what happened to the campuses of the Tsinghua University and the Beida, right? So all the campuses are full of visitors, and the children, the students start traveling around the country, visiting different their ideal schools and visiting large cities. And if you look at 2023, this year is. It's a big year for travel, and you can, as I mentioned earlier, it's really hard for you to book a ticket, book a ticket, or get a hotel room, and all the hotels are like 85% or 90% full. So, and if you look at the second half, there are more holidays, and which means more travel and more family times, and people spending money. So, and also, again, I want to emphasize on the kind of excluding real estate factor. So, which is really important because usually real estate is a huge part of the Chinese economy, the consumer economy. And now with what's happening in the real estate sector, and now we have more savings and more spending on those discretionary consumer products, which means people are actually spending more on the consumer products than before, because usually it's driven by real estate and a large investments. So yeah, and I'm echoing two gentlemen's comments on second half Chinese consumer spending. I think it's going to be more exciting. Thank you.
Thank you. Great points there. And as panelists have mentioned, the Chinese government has implemented a range of pro-consumption policies, and they cover various sectors, from furniture to property, from vehicles to high-end products. So, gentlemen, my question is, what are your general comments on these policies? Do you think that they have been effective, and do you anticipate that they would continue until the end of 2023? Can I start with Professor Powers, please?
Sure. I think that the ones that the people have been talking about, actually, some of the stimulus, especially on the fiscal side, is probably going to come into play later this year as well. It may already have begun, but it will be playing an important role in the second half of 2023. So it's something that we should expect to have an effect down the road as well. But the challenge for the government is really what we might think in ordinary American English. They want to get the best bang for the buck, or the best bang for the renminbi. Or as economists might say, they want to optimize the multiplier effect. In other words, they want to put money in the hands of people who are then going to spend it in ways that enhance the economy, where the economy needs to be supported and improved. So in particular, I think one of the issues that we have right now is that with some of the weakness in the real estate sector, people who rely on real estate as their major asset class are somewhat concerned that it's not going to continue to grow in value the way it has in the past. And so they're restricting their purchases as a result of that. Now, one approach to dealing with that, of course, is to support the real estate sector, which I anticipate the government will do. And I think it will do that very effectively and convincingly, because that's very important for supporting consumer confidence. But at the same time, there's a longer term issue there, which is that we need to move away from so much focus, so much emphasis on the real estate sector. Now, I know that this may actually benefit some of the sectors that my colleagues on this program are working in. But I'm not serving as their shill today. I actually believe that this is good for society as a whole. And that is, I think that we need to see the development of more alternatives. And one, very opportune aspect of that at the moment would be that as the country needs to find ways to continue the rapid growth that it's experienced in the past, more money needs to be put in the hands of entrepreneurs, of small and medium-sized enterprises that are developing new products, largely, in the tech sector, in the online, various types of online distribution sectors, in green energy, in these places. And how can we do that? Well, one way would be to make that an attractive asset class. That is, in order to get people to invest in those types of assets.
All right. Mr. Lannes, can I get your view on this same question?
So I agree with the real estate sector. I think, and I think that has been a priority for the government. So the bailout programs and subsidy programs have been put in place for the real estate sector, and I think that's the right priority, because as we know, real estate is the saving accounts for Chinese people, and there is of course a big consumer sentiment implication. If your saving accounts is not prosperous enough, then of course your incentive to purchase and to consume is much less. So I think that's the right priority, and I think they should continue to bail out the real estate sector and deleverage that sector, which has been over-leveraged over the last few years, as we know. But I think the second thing is, consumption is the consequence. It's the last step of an economic process, which starts with, if you go back, you say, well, in order for people to consume, they need to have income. For people to have income, they need to have jobs. For people to have jobs, you need entrepreneurs. And I agree with Professor Power's point on entrepreneurs. And so you need to go to the root cause of, why are people not consuming? Well, maybe because they don't have enough income. Also, why don't they have income? Well, because there is a lot of unemployment, higher than was the case in 2019, for example, especially for the youth unemployment. So how, and then the question becomes, well, how do you fix this? And where, therefore, should you target your stimulus? And I think the stimulus should ultimately be on the supply side of the economy. So entrepreneurs and industries and service sectors, entrepreneurs, as opposed to, or in complement to what you do on consumption. But again, if you stimulate consumption, that is only impacting the short term. You are not really addressing the root cause of why consumption is slower than expected. I've always, simplified in a simplified way, thought about the Chinese economy success over the last 40 years or so, because of two main drivers. One was the Chinese government and the build out of infrastructure. So it became very easy for anybody to do business in China. Mm-hmm. And that was extraordinary. And that's very unique, the way I think the government has done this over the last 40 years. And the second driver was the Chinese entrepreneurs, from the mom and pop shop to, the digital, behemoth that have been created. There has been millions and millions of people who created jobs and created companies because they created jobs. Created job because they created companies, sorry. And so we need to recreate that dynamic. I think it's, what can be done for the entrepreneurs, what can be done so that they continue to create companies and then recruit people, create jobs. And if we do that, then I think we'll solve the consumption problem.
Great, gentlemen, you both put an emphasis on the importance of companies, enterprises in expanding consumer demand. Actually, yes, we all know that restoring consumer confidence relies on improvements in employment and income expectations. The private economy, particularly small and medium-sized enterprises, they play a vital role in China's economic growth. So my question to you is, how significant are SMEs in expanding consumer demand, and what measures have been taken to support private companies and those small and medium-sized, even micro businesses? What more needs to be done on this front? Professor Powers.
Well, I think that that probably some support, both fiscal stimulus and some on the monetary side. I think providing more funds, making more funds available for investment by the small entrepreneurs is extremely important. But again, just as I think that the government is somewhat concerned that fiscal stimulus may not end up in the right place, it's also concerned that let's say reducing leverage ratios or providing other incentives for greater lending by banks and other institutions may encourage investments that are not the ones that are best for the economy. So I think that there is going to be a great deal of thinking put into how to target the stimulus to get to the right places. And I think the small and medium-sized enterprises are the right place, the private companies that are innovating. Now, Mr. Lannes mentioned that China has a great history of innovation in the technology sector, in the sharing economy, the online payment and online purchase economy, and so forth. There were many entrepreneurs, they're household names now, and so on. But I think that there is a difference between a cultural difference, perhaps, between China and the United States in particular, and perhaps Europe as well, although I'm more familiar with the U.S. society. And that is that, now speaking now as an educator rather than as a researcher in economics and finance, and looking at my students and the recent graduates who are now experiencing this 20%, supposedly 20% unemployment, I know that that's a high number, and I would like to see those people get jobs as quickly as possible. But I also suspect that part of the reason that number is high is that their parents are actually reasonably affluent, and they can be a little bit more patient in looking for jobs. They now have tremendous world-class educations, and they are looking for challenging jobs to step up to. But there is something of a cultural issue here, which is that I think that now that we're reaching into a larger group of potential entrepreneurs, there is some reluctance. Many of the students would like to do this, but there's a cultural barrier there. It's not something that they can easily convince their parents. It is a good thing if they say, I want to get into this small company with some of my friends, or I do want to do a startup or whatever. This is not something that is as common in Chinese culture as it is in American culture. Now, having said that, such businesses don't always succeed. There's a lot of risk involved in this. But I think that if there were more funding available on the margin, many of these very talented, very well-educated young people would have a little bit more incentive, and they would go out and work for these companies, or they would start them up themselves. And I think that that's something that could be good for the economy.
Mr. Lannes, what would be your suggestions for small and medium-sized enterprises in terms of policy support?
I would mention a couple of things. One is access to credit. I think it's, bank credit. It's very important as you start a business that you have some working capital facility in place with your bank, for example, depending on the payment terms that you have with your customers, and also if you want to expand, that you need access to credit. And so that would be one area. The second area is, you would say, taxation, and you could say income tax for the first 3 years or first 5 years, or you could have a mechanism that says for the first 3 years you're not going to pay any tax on your profit, so that you can reinvest those funds into the growth of your business. Could be another area. I think the third, typically what we see in other countries, is around regulation and making sure that starting a business, whatever the sector, is easy, straightforward, simple. You can be in business overnight, and you can focus on the business as opposed to filling out papers and responding to requests from the administration. I think so. Those three areas: access to credit, I think tax incentive, and then deregulation, essentially, or easy process to be in business, I think would be three areas that I would recommend.
Okay, and speaking of starting businesses, I think Mr. Shiong probably has a say on that front. I mean, he meets with new business startups all the time. So, Mr. Shiong, I want to ask you, first of all, from an investor's perspective, how do you think can capital play in the process of promoting small and medium-sized enterprises and their growth? And I know that your company have invested in many consumer brands in recent years. In what ways do you think that can capital play by supporting those businesses and eventually supporting the overall consumption growth in China?
Yes, thank you for the question. It's advertising time. So, okay, so we think venture capital is crucial. If you look at what has happened in the U.S. market, and a lot of major brands are sponsored, backed by venture capital investors, and not just technology sector, but also consumer sectors. And you look at apparel space, you look at food and beverages, and a lot of things are kind of ideas and products are backed by venture capital investors. So. Speaking of employment, speaking of new business opportunities, I think VCs play a kind of really important role in the entire economy. And because of VC, we usually only provide a very small portion of capital to those companies. We're not deploying huge amount of capital, but we're kind of putting here and there small capital to get companies started, and then with the right leadership and the right product market fit and those companies that with the products they can really take off. So it's really kind of a combination of both capital and entrepreneurship. So as Professor Powers and Mr. Lannes also mentioned earlier, it's kind of a combination of both Chinese culture, which really emphasizes on entrepreneurship, and so people are not purely relying on going into a large corporation, getting a job, and sometimes Chinese people are really entrepreneurial. I think that's really a big advantage of the economy, and that comes really nicely with the venture capital piece, right? So if you look at globally, their venture capital pretty much only belongs to a U.S. market and a Chinese market. So those are the two largest venture capital markets in the world. And of course, we have Israel and we have other parts of the world participating in the ecosystem. Mm-hmm. So speaking our role in the economy, we think we really create new opportunities for future employment. We create potentially large taxpayers and new products to the next generation consumers. So speaking of that, then I think with the right allocation of resources into venture capital, which can be a really good leverage for the government to consider.
All right, great insights, gentlemen. Let's move on to our next topic that we'll be talking about, the changed consumption structure. And let's focus on the term new consumption. So with the rapid development of China's massive consumer market, the concept of new consumption comes up. Gentlemen, I want to get your ideas on how would you characterize China's new consumption and what really sets it apart from traditional consumption? Can I start with Professor Powers, please?
Well, I'm not entirely sure what your definition would be, but I guess you're asking me to provide my definition. So when I think of the term, the phrase new consumption, I generally think of lifestyle-related purchases that are attractive to middle and upper income households, mm-hmm. Things that enhance the quality of life. My colleagues have talked about things other than large physical good for purchases, things that make life more interesting. Traveling, could be luxury products. It could be things that enhance the physical environment in which one's living. Better food, various types of services, and so forth. So that's what I think of, and of course, since these products, even if they're not really defined as luxury products, mm-hmm. they tend to be somewhat more discretionary. In other words, they are things that people move toward as they become more affluent, and if they have to, or they feel they have to because of economic constraints, or they're somewhat lacking in confidence, they may retrench and not be as enthusiastic about purchasing them. So that's one aspect from the demand side that I think is important to keep in mind. But on the supply side, the production side, in whether we're talking about goods or services, these new consumption products, they generally are more sophisticated. They require much more skill in manufacturing or providing the services, better education, better training of workers, more creativity in design, and so forth. And that means often investment in various ways through education to companies directly, and so forth. So there is the new consumption is important. It is the way that China is going to continue on the road to becoming a higher income nation. But there are specific differences on both the demand side and the supply side that we have to keep in mind.
Mr. Shiong, I want to get your idea on that. How do investors identify what is new consumption? Would you be more excited when you figure out that a business is identified as a new consumption business when you try to make an investment decision?
Yeah, absolutely. So I think how you define Chinese new consumption is actually part of the kind of global new consumption wave. So because if you look at the consumer sector, for every generation, there's third generation brands, third generation platforms. And of course, if you compare China versus other parts of the world, and then China has two parts of the new consumption thesis. One is the new brands part, right? So in defining new, we compare this kind of new set of things to the existing setup of brands and systems and distribution channels, and then China also is characterized by having this new platforms rising. Compare China to U.S., right? U.S. pretty much dominated like the retail, then traditional retail offline, and then online it's Amazon. Amazon is pretty much the only kind of consumer distribution channel online. And then if you look at China, aside from the traditional B2C platforms, we have a lot of verticals. We have, for example, we have this small company called Poison selling sports shoes, and young people are really crazy about. We have different verticals that sell vertical niche products that fit right into the needs of the young generation of consumers. So I think. As I said earlier, every generation, not only Chinese consumers, but also globally, and each generation yearn for their own generation of new brands and products. So every few years, every maybe 4 or 5 years, every 10 years, there will be new wave of new brands coming out. So consumer brands are always a major theme for investing. I think that's the traction of the sector, right? It's always happening. It's not like, okay, we're done. We should just stop investing in consumers. We should move on to semiconductors only. But consumer has always been a major theme for the global economy. So that's really excites us.
Great insights. And Mr. Lannes, how would you describe China's emerging consumer group, and who are they? What are they like?
No, I would agree with what was said earlier by my two colleagues here. I think you could think of two ways to define this. One is the related to the product and the category, the other one related to the channels. I think on the first one, it's everything that is lifestyle related, health, hygiene, feeling good for yourself, and also making sure that you contribute positively to the planet. So these are areas where you would say these are new areas of consumption, and they could be product or services. But this is the trend, and I think this is an evolution, a very normal evolution of a developing to developed economy. As food and shelter are taken care of, then of course consumers are attracted by other types of consumption, and in particular the consumption that are more fulfilling in terms of your lifestyle in particular. So that's one definition. And the other one is really regarding channels, and Mr. Shiong just talked about that. China is just an amazing place where digital innovation is constant. We again, in a simplified way, but we said China is already at its stage number 4 of development of its e-commerce platform. Started with what we call the shelf e-commerce with Tmall and JD, and then moved to social commerce with WeChat and Pinduoduo, etc. Now we are in the content related or commerce with Kuaishou and Douyin. And now we are already post-COVID starting the O2O, so that the instant e-commerce, which is again with different platforms, and each of those revolutions are just an evolution towards more convenience, more lifestyle, more different ways to enjoy the ease of ordering online and getting things delivered to your home or to your office. And I think that shows the dynamics of this country. I think in many ways China is ahead of all the countries around the world in terms of digital evolution, and I think that's part of new consumption as well. It's not just the what, but it's how you consume, and in particular through the digital landscape that has been created.
Interesting. Gentlemen, so all of you had mentioned this one word, that is innovation. I have this question for Professor Powers. How do you perceive the relationship between fostering innovation and expanding domestic demand?
I think that that's a very good question. I actually think that those two things at the present moment, are very closely tied together, and there is, in a sense, a very nice way possibly to address both of them. And I want to preface my answer a little bit by saying that I'm not an unrestrained advocate of financial markets and taking risks and so forth. I do believe that China's various asset markets, let's say in particular stock markets, could be expanded, but I think it should be done in a way that's protective of individual investors. I actually am a former financial regulator from the United States. Mm-hmm. I'm very conservative in terms of protecting individual investors. I know that many of the investors in China are small individual investors, which is quite different from the United States, where people often invest their money through various types of intermediaries, funds, and so forth. So whenever I say that I think that we should promote a certain type of asset class, I'm assuming that we're going to develop and educate the right types of intermediaries so that this market can be done in a way that protects individual consumers. But I think that what we have is we have a couple of things going on. One is we have at the bottom of the lack of confidence, we have this weakness in the real estate sector, which is always an issue. And that's because there are not good alternatives. So I think we need to find additional asset classes for ordinary people, for individuals and households. Secondly, I think we have this issue that young people, extremely talented, extremely creative, entrepreneurial. I would agree with Mr. Shiong, they're very entrepreneurial, but I think there are cultural barriers to their being willing to take the risks that are necessary to start up small firms. However, these two things could be addressed if we could get households to invest more funds in these types of new ventures. And I think that could be done in a way that, number one, protects the individual investors, because they won't be investing in penny stocks and taking high risk, but rather through intermediaries who know what they're doing and can protect them. And at the same time, I'm not suggesting that we do this in an extreme, unrestrained manner. Mm-hmm. I'm talking about on the margin, encouraging people that are somewhat entrepreneurial, innovative, to go into these areas. Personally, I am not an entrepreneur. I'm very risk averse. I would not want to start a startup firm and so on. But there are many young people who would be willing to do that, but it's kind of not the thing. When they talk to their peers about what they're doing, it's just not what their parents want them to do or what other people are doing. There are many entrepreneurs in China, but we need more of them. And on the margin, there needs to be a bit more incentive in that area. So I think that those two issues could be sort of addressed simultaneously.
Interesting point there. Let me get to Mr. Lannes. You talked about e-commerce earlier. You talked about some of the new platforms that China has been promoting, and the Chinese consumers love to not just navigate, or also to spend money on. How do you think our offline and online retail channels converging now to meet the demands of this new consumption trends in China? Now that with the pandemic is over, people can actually go to brick and mortar stores and to consume now. But online platforms, they still need to stay attractive to their consumer group. And also we are witnessing an increasing number of brands utilizing new technologies like AR and VR and even the metaverse. So how will this drive consumption?
Well, I think all of those developments, all of those technology developments that you mentioned is essentially favorable to the consumers. I think they have an amazing array of choices in front of them, not only in terms of products and services, but also in terms of the ways to access those products and services. And I mentioned the evolution of the e-commerce ecosystem, which has happened in the span of less than 10 years. And as you said, the you said what I call the O2O, which is online to offline. So you order online and you get delivered from an offline store that is near your home or your office or where you are. All of this is providing sort of second health to the retail stores, because they were, they have been suffering a lot over the last few years because of the growth of the e-commerce channels. And so now with the O2O, that's a way for those offline channels to get back into the game and contribute to satisfying consumers. And so that's a very healthy development, I think, for the brick and mortar retailers that are out there. I think in terms of technology, as you mentioned, the AR, VR, and others, I think all of this is helping consumers to realize and to try, without sometimes even going to the store, what these products and services can do. I think the traceability as well that is now available in many stores about where the product comes from, how was it manufactured, what's the raw material involved in those. All of this is also technology enabled, and it's very, very useful to consumers so that they know what they buy. So all of this, I think, is favorable to the consumers and helping consumption, because it's reassuring that these are, good products and services to consume.
Okay, and Mr. Shiong, what would your advice be for the businesses that you look at, or those that you want to make an investment in terms of utilizing those new technologies?
Yes, well, people should try everything, right? Just for example, Mr. Lannes mentioned earlier how people consume is another way of defining new consumption. And so, for example, look at the global rise in video shopping. Video shopping has been well, of course, it's new on video shop on your phone, but video shopping at home, at the TV, that has been a tradition worldwide for a very, very long time. So every entrepreneur should just leverage that and kind of combine the culture effect with the technology factor. And also going to every market that has your audience, right? Not just be limited by, okay, you're a Beijing company, you're a Shenzhen company, okay, you're competing for a small piece of pie in China. You should think globally, right? Increasingly, I think, under this new environment and the kind of reshaping of the global economy in different orders, and then everybody should consider going global. Not just traditionally we're thinking, oh, going global, let's go to US, let's go to Silicon Valley, let's go to where we have friends. Now you have to consider other part of the markets where you need to have allies. So I think that's really important in today's economy.
Okay, let me get back to Mr. Lannes, please. Mr. Lannes, you're an expert of the luxury market. So let's talk a little bit about China's, let's say, high quality consumption or luxury consumption. How do you think the expanding mid to high income population and this rising disposable incomes in China will influence this market?
Yes, of course. I think China is the growth engine of the global luxury market. So Chinese consumers are the driving force essentially to the overall growth, whether they buy in China or whether they buy outside China when they travel. It's all about Chinese consumers, I think, and so that's why luxury brands around the world are focusing on China, investing in China, augmenting their footprint, and of course engaging with the different types of consumers, from the VICs, very, very high worth individuals, to the average income who are buying their first luxury product for the first time. So there is a range of consumers there that is appealing to the brands, and so I'm very optimistic about the contribution of Chinese consumers to worldwide consumption of luxury. And as I said, I think the thing that we're going to see this year and following years is, of course, Chinese consumers will travel a lot more, and so that consumption is going to happen, we believe, still the majority in China, because I think the Chinese, for example, shopping malls and all the digital channels that are available to buy luxury products are probably top notch compared to what exists in the rest of the world. And so the consumer experience offline and online is way better in China than it is in other parts of the world. So I think Chinese consumers will actually want to buy a lot of their luxury products in China in the future. However, we should be aware that now travel is easier, and so they will also take opportunity of their travel to buy outside China.
Mm-hmm. And also, could you provide some analysis of China's luxury market performance in year 2023? And additionally, what broader consumption trends do you see from China's luxury consumption?
Yes, of course. Maybe two things, and we have a report on this, which is available as well. But one thing is, overall, we believe that in 2023, the luxury market in China, personal luxury market, that includes everything you find in a shopping mall plus luxury beauty. So those categories will get back to the 2021 level by the end of 23. You know that they had an extraordinary growth up to 21, and then there was a slowdown and a decline in 22, mostly because shopping malls were shut down, etc., because of lockdowns. And now we believe that in 23, they're going to go back to 21 level. So that's one thing. I think the other thing is, I think the sophistication of the Chinese consumers. So the big brands and sometimes the most aspiring brands do better than the more affordable luxury brands. And so that has been a trend for many years, and we continue to see this in 2023.
Oh, great. And also, we do have a few minutes left, and I would like to touch upon this topic about income gap quite very briefly, though. We know that income gap between urban and rural residents in China has been gradually narrowing. Data indicates that the real growth of per capita disposable income in rural areas has consistently outpaced that of urban areas. And in year 2021, for instance, the growth rate of rural per capita income was 2.6 percentage points higher than its urban counterparts. As income levels continue to rise, it represents opportunities for businesses to tap into the expanding purchasing power of rural consumers and contribute to the overall growth of the economy. So let me get to Professor Powers. What are your perspectives on the importance and significance of further developing the countryside as a way to stimulate consumption and also raise incomes?
Very quickly, I think you really hit the nail on the head. It's an opportunity, it's not a problem. Mm-hmm. There are people actually who are saying that China's population in the aggregate, because it's stable or may even be declining, that this is somehow going to be a problem. There is still a vast amount of untapped talent and buying power in China's rural areas. By developing these areas, not only will these consumers generate greater wealth for the economy as a whole, but they will contribute their talents to the economy. They will have the opportunity to be better educated, to start their own businesses and so forth. And I see that as a very, very positive prospect for the next few years.
What about you, Mr. Shiong? Would you be looking at investment opportunities in businesses that target rural areas or smaller cities?
Yeah, so we don't call it rural areas in kind of our way of looking at new opportunities, because we think it's another wave, probably the third wave of urbanization happening in China. So initially we have this already happening in the late 90s, and then kind of after Olympic Games in 2008, and then China's rebuilding a lot of infrastructure. And now it's the third wave of urbanization happening together with the policy kind of made more towards improving the local lifestyles of the local residents, and increasingly notice the fact that people are coming back to their hometowns, right? Not just in the past, young people tend to stay, like, oh, I want to stay in Beijing, I want to stay in Shanghai, Shenzhen, and that's the top one choice. And now today, after college, people just go back to their hometowns. So and with the more talented people kind of going back to their hometowns, creating their own businesses or doing things on their own and attracting venture capital like us, and they create more opportunities for local employment and being part of this huge urbanization process. Thank you.
Okay, we have, okay. I really don't have the time to shoot my final question. I still have a long list of questions that I didn't have the time to ask. But gentlemen, thank you so much. We can never have enough time because we could go on forever on this topic. But you gave some great insights. Thank you so much. And hopefully that next time we will make more time and for more discussions. Once again, thank you very much. We had Professor Michael Powers, Chair Professor of Finance and School of Economics and Management of Tsinghua University, Mr. Bruno Lannes, Senior Partner at Bain Company, and Mr. Wang Shiong, founding partner of China Growth Capital. Thank you so much for staying with us. Our audience, this is a special edition of CGTN Biz Talk, and we'll be back next time. See you. Bye for now.